If you're thinking about buying a home in the Houston area and you're concerned about the interest rates, you're definitely going to want to watch this video. Hey, it's James Potenza, that Houston New Home Realtor. I help hundreds of people navigate the entire home buying process from start to finish, and they all have questions about the mortgage. And speaking of which, I have a special guest with me today, Danny Garcia with Union Home Mortgage, and we're going to talk about interest rates and everything that you might have a lot of questions about. So today we're going to talk about, obviously, the interest rates, where the interest rates going. Are they going to go up or down? And should you buy a home now? I mean, or should you wait or try to time the market? We're also going to talk a little bit about points. Buying down points, is that actually advantageous for you to do right now? So, Danny Garcia, I got a question for you. Where are the interest rates going, and what do you think about that?
That's a tough one, James. When I think about that, I have to, I guess, share a little bit about my time in the business. So 40 years in the business, and when I got into this business in the early 80s, I saw interest rates on home mortgages eclipse 15%. And so where we are now, although it may seem high to some of the newer individuals that are in the market, it's not necessarily high in comparison to where we have been historically.
Right.
As far as where we think, or where the thought process for where these mortgage rates go in the near future, when we see the feds change their policy with respect to raising rates, I would think that we'll see some relaxation from where we are in the current market levels. Exactly where, I don't think anybody can predict, but we would hope to see it settle maybe somewhere between 6 and 5.5 or so when we reach that point.
Right. Talk about buying down points. What does that really mean?
I think first we need to identify what points are. So two things come to mind when we talk about points. One would be an origination point, which is a cost that's associated with originating that product from the individual lender.
Yeah.
And the other would be discount points. Right? When we talk about discount points, we're really talking about a fee that's paid to obtain a discounted interest rate. So a permanent buy down, if you will, of the mortgage rate.
Okay, that's very good information. Is it advantageous for somebody to even explore that opportunity, or?
I figured that would be the next question. So when we talk about whether or not a person should engage in purchase of points, you need to look at the time that someone plans to be in a home, and it's a factor that they need to consider. There's a cost up front, every point being 1% of your loan amount that you're going to invest in what will be a lower interest rate. So you need to look at what your monthly savings will be in principal and interest, and look at your break-even time for that investment.
Right, exactly.
Make sure that you're going to outlive that time in the house so that there's some gain to that initial investment.
Do you think now is the time to buy a home, or should you wait or try to time the market, or what's going on with that?
I think that's a really good question. If you consider renting as an option to purchasing, then we need to talk about a couple of things. One is, what's happening to your landlord right now? What are they experiencing? We're talking about higher interest rates, maybe insurance increases, tax increases, and those things are going to affect what your landlord is going to be able to offer you as a current rent, right?
Right.
So that monthly rent's going to have some interaction with these changes that we're seeing in the market, as well as, obviously, if you go out and purchase. If you're purchasing right now, you're going to pay a little bit more in interest. But when you consider what we're looking at long-term in the market, I think it does make sense to buy now. And let me explain why I say that.
Yeah, I told you this was going to be great information.
Historically, when we look back, in my experience, I look back to the 80s, and we had a significant market shift then. And when we did, we had a large number of homes on the market. There was a surplus of properties. And
absolutely.
That is something that enabled prices to fall during that particular episode. I don't see that as a component here, because what we're looking at now is a market that's really suffering for inventory. And with that said, as we see these rates improve, as we expect may happen over the next few months or next year, we're going to see more buyers return to the marketplace. And this demand is going to be exaggerated on these homes that are available. And so you're going to go back to maybe bidding wars on houses and paying more for properties.
Don't want that.
And if you're able to capture a home now at today's prices and not have to go through that bidding war with someone next
Right.
year or months later,
Right.
it makes now the perfect time because
Absolutely.
you can always refinance that when those rates improve.
For sure.
And you've captured the best of both then. You've got today's price and you get tomorrow's rates.
100%. Great information. I mean, every time I talk to this guy, I learn something. So if you guys had any value to this content at all, make sure you hit that like button. Show us that you care. Go ahead and share it to anybody that you might know that's looking to buy a home anywhere in the near future. The information we got from Danny is invaluable.